Yeah. So good evening, first of all. In today's episode, essentially what I want to talk about is pension funds, as well as some of the ideas that I have. Those of you that may know, at this point, I'm reading a book called The Lion Tracker's Guide to Life by Boyd Vardy. And I wish I had it here, but actually I've already put it in my room. It sleeps next to my bed and then it spends the day with me in the office. So I read it in the morning before I come to the office, and then I come with it to the office. I work throughout the day, and then I read it at night before I leave the office. And essentially, the idea of reading that book was essentially not even to inspire creativity, but essentially to see the ring light. There you go. Yeah, not to inspire creativity, but essentially to tap into some of the pathways that I naturally have. And I've always had this thing where I follow an idea, or I get an idea and I follow it from start to finish. And those of you that have got me on WhatsApp would have seen or would see with my WhatsApp stories that what I essentially would do is get something that triggers me or something that inspires an idea, and then I would write out a story where it develops in my head. And normally that's not planned, it happens organically. And so today I'm gonna try to do just that. Um, but with pensions, just to put down some of the ideas that I have, as well as to see how far I can go with this thread. So that's the one. Lion tracking, essentially, it literally is looking at footprints on the ground, looking at the way the bushes are stained, the way they're lying, that sort of thing, and trying to find a lion in the wild. You can track any animal, so it's not just lions, it's birds, it's eagles, I mean, those of you that know tracking, you'll vouch that, yeah, essentially that's quite a fascinating um, pursuit, to say the least. So I'm gonna do that with an idea, as I said, and I'm gonna be engaging you. The other thing I'm gonna be doing for the first time, I'm gonna be reading from my journal. And that's because the topic is of such a nature that it actually invokes a lot of my long-term thinking. Um, so you gotta be privy to that. And then the last thing that I'm gonna do, I'm going to give a shout out to this book um, by Maiteri Wahome, and it's a history of asset management in South Africa. And if you can get this book, I got it as a referral from a friend, longtime friend of mine, and it essentially speaks about how did we arrive at this point where we essentially have got an asset management industry, and it's called building capital. And I think that is apt with the topic that I'm going to be speaking about, and you will see why shortly. That's Maiteri Wahome, Building Capital, A History of Asset Management in South Africa. For those of you wondering why I'm listening to AirPods, I've got AirPods on while I'm recording. It's simply because I'm working. I think it's about 11 o'clock at night. And what I'm trying to do is essentially let music guide me as well. I'm listening to Burna Boy and Yosondo. It's a playlist as well as Vusi Mahlasela, very renowned African artists. Probably one of the best that I've heard in my life. And I think it just goes with the theme. And you will see, it's one of those recordings where it's almost as if you're reaching deep into what is my ultimate wish with the channel, my ultimate wish with the teachings that I do try give, or the conversations that I try have. I think a huge shout out to Chris W. Mpethe. Never met him before, but I've recorded once and I check out his statuses and he occasionally talks about some of these things. And I sit there and I think, wow, could it be that, hey, you have a twin, an intellectual twin? So I would have liked this to actually, in fact, be a call that we're having between myself and him. and having a discussion about this. But such is the nature of recording at this time, and having not planned it in advance, that sort of thing, it becomes well near impossible to have someone here with you to record. The time is 11:11. I just saw that by coincidence, but I'm gonna proceed to read a passage that really moved me. And this has been the story of my life and what I've been trying to do all these years. And I believe one day I'll get it right, but you try all these avenues. It's a quotation, or it's something that Gaby Mahomola said in this book, The BE Billionaires. He says, any emerging nation, to stimulate economic growth within its ranks, needs to have its own banks, insurance companies, and pension fund management companies, which are in the hands of its community. I call this an economic strategy for survival, which is supplementary to the political battles that were fought by our political leaders. It's telling how he identifies banks, insurance companies, as well as pension funds as critical, you know. He says, I call this an economic strategy for survival. You cannot survive economically as a society if you don't own your own banks, insurance companies, and pension funds, you know. And he mentions there very clearly that they must be in the hands of its communities. And that's really going to be the cornerstone of the conversation today. But as I say, it's going to happen as organically as I can. But what I will try to do is not make it some kumbaya episode that is depressing about how this and that was stolen and how this and that was taken away. It's just going to be a conversation and exploration. And yeah, please just bear with me. Enjoy as well. As I said, those of you that are interested, I am playing Yosondo in my ear. He's a Senegalese artist, probably one of the best African artists ever. And it's interesting when I mention Senegal, also someone that comes to mind is someone like Akon. Akon has very famously been on a drive where he's telling African Americans, or as Dr. Umar Johnson says, American Africans. So it's Africans that are living in the diaspora in America due to slavery and that sort of thing. But it's interesting that two people from the same place can inspire what I'm doing now, one through music and one obviously through both through music, but then ultimately Akon through what he says in his interviews about American Africans returning to the continent and then realizing their dreams here because they are refused, apparently, those aspirations in the United States. A few things that I'm going to work with. So what I've got here is a compound interest calculator, as you can see. And I'm just going to do a calculation that says if I put away 2,500 per month, and I know in the States that's quite a cumbersome. This is supposed to be in rands, the currency. I don't think I will get rands, but just imagine that's a rand sign. And essentially, we're going to invest it at 8% per year, and we're going to invest it over 30 years. And actually, I'm going to recalculate that it's not going to be 2,000. So it's 2,500 per month. So it's 2,500 times 12, which is 30,000, right? So I'm going to start that at 0. No, let me actually just do it correctly. Let me say initial investment is 0 today. So if you started today contributing to your pension and you made 2,500 monthly deposits, let me say at the end of the month, And the reason I say it's at the end of the month is because, as most of you would know, you get a job and you only get paid after the 30 days. So it's almost like a 30-day loan. The annual deposit increase, I'm going to leave it at 0 for now. And that's because I don't want to overcomplicate um, the calculation. So what you'll see is that I'm being very, very conservative. And so essentially, you're going to have a situation where if I'm putting away 2,500 times 12, essentially in a year, I have contributed, a calculator is disappearing on me. There we go, times 12, 30,000 rands or dollars in a year. And my aim is to do a calculation where I see if 1,000 professionals, I'm not going to say young professionals, but if 1,000 professionals do this over the span of their lives, what is possible, right? So I'm first going to calculate with one and then calculate with 1,000. So it's 30 years, it's 8% return and no annual deposit increases. So even as your salary increases, um, you don't increase your pension fund contributions, which is unlikely. And I just want to show you some of the numbers that I play with, or some of the numbers that inspire me to keep thinking, never give up. So essentially end up with a figure of 3.5 million. 3.5 to 3,107 million, 0.87%. And I'm comfortable with that, right? To say at retirement, you're going to get 3.5 million. I can assume that it is post-inflation. The reason I say it's post-inflation is because I used an interest rate of 8%. So yeah, as much as I say I'm being conservative, I'm assuming that you earn the stock market return, and I'll show you why now. And then minus inflation, and there's no annual deposit, how much you will have at the end of 30 years of putting away money to your pension, about 3.5 million rands, right, in today's money. And that's for one person. Same calculation for 30 people, for 1,000 people. I'm just going to essentially add 3 zeros, which means that these people are putting away 2.5 million per month. And I'm just going to double check my calculation, 2,500 times 1,000. Yep, 2.5 million. And I expect that all that should change is that the commas should move one way or the other. And I say calculate. And you're looking at a figure of about 3.523 billion, 107,865, right? And that's for 1,000 professionals. So 3.5 billion. That is how much you would have set aside in pensions at the end of 30 years, growing at 1%. Just for interest sake, if you increase your annual deposit amount by 1%, so every year you are adding 1% to your installments, the same figure goes up to 3.8 billion. So not too much of a jump, as you can see, right? And lastly, I'm just gonna try it at 2% increase per annum. If you check most of your statements, it normally says a 10% increase. But I just want to work with conservative numbers and just see how sensitive that is, just so that you guys can see what a shift does. So 2%, 1% takes us to 3.8 billion, and then 2% increase takes us to 4.2 billion. Right? Look at me rounding off the 76 million. as if I've got 76 million in my bank account. So those are the figures we just want to work with, okay? Is it a lot of money? Is it not a lot of money? Let me know. I'll come back to this conversation. I just like to get the numbers out of the way, right? Now, the next bit of research that I'm going to do, or type of segue that I'm going to take, is to look at regulation. Let me Google. Oh, Google. Yes, I do Google. I'm that type of person. Regulation 28 limits, right? I want to see if I can hide these controls or put them somewhere where they're not interrupting me, right? What is a Regulation 28 restriction on retirement funds? So the first piece of legislation that I'm going to look at is this Regulation 28. And what Regulation 28 basically does is it prescribes to pension funds where they can put their money or where they can put your money, right? And I'm going to open it itself. Um, this was the discussion about the amendments to the Regulation 28. I'm not looking for the amendments. Oh, Regulation 28 is an amendment, actually. So used to saying Reg 28 that I've even forgotten when it's an amendment. Mm. See, I don't want to get this from pension funds. For example, now I've opened it from a momentum. The reason I don't like um, doing that is because it essentially creates a precedent where the underlying source of my information is a pension fund, and I don't want that to be the case. I want the source to be the legislation itself. So I'm just going to open the legislation itself just so that I'm thorough. Some people that read the stuff, especially when you go in here, they're very trigger happy to come and sue you and that sort of thing. So there you'll see we have the definitions, you've got the amendments, asset spreading requirements, right? And I want to show you what Regulation 28 essentially says. Asset spreading requirements. The preamble says a fund has a fiduciary duty, i.e., a financial duty, a financial trust duty, a best interest type duty to act in the best interest of its members, right? In its members. So I'm gonna actually summarize these things. So it speaks about fiduciary. How do you spell fiduciary? There we go. Fiduciary duty. And it speaks about best interest um, of its members whose benefits depend on the responsible management of fund assets. Right? So it says whose benefits depend on the responsible management of fund assets. Please just bear with me if you feel as if the reading for you is a bit didactic and a bit boring. The reason why I'm doing it is so that if you don't read the regulation yourself, at least you're in a position where I've engaged on it for you and with you, right? It says this duty supports the adoption of a responsible investment approach to deploying capital into markets that will earn adequate risk-adjusted returns suitable for the fund-specific member profile. So that's another thing. We're talking about risk-adjusted returns. And it talks about suitable for the fund's specific member profile. All right. Liquidity needs. Liquidity needs as well as liabilities. So this is in essence what a pension fund is supposed to take into account when they invest money on behalf of its members. So it's the member profile, liquidity needs, as well as the liabilities. And we'll come to that. It's risk-adjusted returns, right? It says prudent investing should give appropriate consideration to any factor which may materially affect the sustainable long-term performance of a fund's assets, including factors of an environmental, social, and governance character. This concept applies across all assets and categories of assets and should promote the interest of a fund in a stable and transparent environment. I just wanted to read that preamble so that we're in a position where we understand why Regulation 28 was passed. It was passed to ensure that a fund is acting in the fiduciary duty best interest of its members. The benefits depends on responsible management of fund assets for risk-adjusted returns suitable for the fund's specific member profile, liquidity needs, as well as liabilities, right? And then it continues to define a lot of finance terms, and a lot of the terms talks about the licensing of the fund, which is cool. Talks about definition of the banks, the Islamic banks, the Islamic liquidity management. Private equity fund means a managed pool of capital that has its main business making of equity-oriented and related investments in unlisted companies to earn income and capital gains. I'm going to highlight that. Not going to use it much, but I think it's important as well as we go along the way that you get some of these sort of things, right? A property company means a company of which 75% or more of its fair value of its assets consists of immovable property, irrespective of whether such property is held by that company or as a registered owner, or indirectly through shares or the exercise of control over another company that is a registered owner of the property. And then it says, or of which 75% or more is derived from investment in investment property or from investment in a company of which English for 75% or more in property. Principles. Then it says a fund must at all times comply with limits as set out in this regulation. A fund must have an investment policy statement which must be reviewed at least annually. So it says reviewed at least annually. It's a bare minimum that it gets reviewed annually, right? It says a fund and its board members must at all times apply the following principles: promote education of the board with respect to pension fund investment, governments, and whatever. So educate the board, monitor compliance with the regulation, right? In contracting services to its fund, consider the need to promote broad-based Black economic empowerment. I don't know if that would have changed with the change in BE policy earlier this year. And then it says ensure that the fund's assets are appropriate for its liabilities. right? And then says before making contractual commitment to invest in a third-party managed asset or investing in an asset, perform reasonable due diligence. So that's another requirement of the board, performing due diligence, as well as market credit risk, and continues to list out all of those items. And then speaks about asset limits, and I think this is where I wanted to get to, because this is the hub of what Regulation 28 actually was adjusting. So the asset manager says a fund must only hold assets and categories of assets referred to in Table 1, right? So check Table 1. Those are the only assets you're allowed to hold in a fund and must comply with limits set out in this regulation, right? And then they say any portion of a fund's total assets associated with a specific category of members or a specific member the fund provides individual member choice must comply with the limits in this regulation. So ultimately, it's a long way of saying that don't beat the limits. Whether, for example, there's some patients that are cast in stone, this is what we do. Then there are other pension funds that say, members, please advise us what should we do, but the limits will ultimately be set. I'm listening to this song by Alexandrov Ensemble, The Birch Tree. I actually discovered it when I was reading a book called, I think it's called The Patriarch. It was a wonderful book about a Jewish man who is somewhat orthodox, and throughout his life he builds his fortunes. And as you would know, in some Jewish customs or in Jewish custom, he essentially becomes the patriarch and becomes in charge of seeing to the fortunes of the family. So it's very humbling for the song to come on at this point. It's called The Birch Tree by the Alexandrov Ensemble. It is a Russian song. Those of you that don't know, Jews have quite an extensive history with Russia, but I don't want to dwell into that. And then the legislation says, notwithstanding A and B, so without disregarding that choice and the limits, the portion of total assets of a retirement annuity fund, pension preservation fund, or whatever, so essentially your pensions, right, that is associated with the fund member policy or with another contractual arrangement between the member and the fund relating exclusively to the fund's liability to a particular member or the surviving spouse, but not in terms of the rules of the fund entered into before April, then need not comply with the limits set out in this regulation. So essentially it says that if you made an investment, so essentially this is talking to everyone 40 years and younger, this would apply to you, assuming that you started, no, actually not 40, my Lord. Let's say 35 and younger, assuming that you started working at the age of 25. This legislation applies to you, but also to investments made after the 1st of April. Everyone before that, so our uncles, our dads, you guys are exempt from this. Right? The contractual terms to the amount of frequency of premiums, contributions, any changes made to the whatever. So in other words, we're not going to mess with your guys' pensions. Everybody else after 1st of April 2011 on April Fool's Day. Then it says that a fund must not invest or contractually commit to invest in an asset, including a hedge fund, where the fund may suffer a loss in excess of its investment or contract. So in other words, they may not engage in forex and derivative trading, that sort of things. It says this does not preclude a fund from investing in derivative instruments. Okay, all right. It just says hedge funds and private that may expose the fund liability must be held in a limited liability structure. So in other words, don't put the whole fund inside of forex exclusively. Then it says assets and categories of assets referred to in table 1 must be calculated at fair value for reporting purposes. Fair value just means if any random person were to buy that asset, how much would they buy it for? So management can't come and say, we bought this for 20 billion, therefore it's worth 20 billion. They must continuously check how much these things are going for in the market. Then it speaks to, and now this is where the table comes in. And what I'm just going to do is I'm just going to go to the table itself so that I can read it from there. I can read it in words, but I think I can already tell through at the moment that you guys are just gonna fall asleep, you know. It's simple here, fund must not borrow. So 100% dependent on pension fund members, right? As a fund may engage in security lending subject to certain conditions. Security lending basically means if we own shares and somebody wants to borrow those shares and give us interest, we actually can do that. And then they do whatever they want with the shares. They must just bring them back when we need them. And then here it speaks about how to report to you guys, the members, and then exemptions. It says the registrar may, on written application by a fund, or in general exempt a fund or categories, types of kinds of fund from all or any of the provisions in this regulation, subject to conditions that the registrar may impose. Now we finally get to that table, that holy grail that we speak of, right? Now, this is what they're saying to you, right? They say these are the assets that your pensions may hold, and these are the limits that they may have in those assets. This is the most that they can do, or essentially, these are the limits, the most, the least, all of that stuff, right? And that's essentially Reg 28. So then it's gonna define your. So we've already gone through this much. You're welcome. Oh, undo the zooming. Okay, right. We've already gone through these. We've gone through the general as well. And then we're just going to then look at what are the cash limits. So this basically says 100%. Your pension fund must hold a maximum of cash of this much, or may hold maximum of this much. And then, oh, my favorite one is other assets and alternative investments. And we'll come to that now. So what we're gonna do is we're gonna draw up a table where we say but the table's already here, so I don't have to draw it up. Yeah, guys, you'll get it here. So it says the limits being the maximum percentage of aggregate fair value of total assets of fund, categories of assets, item 1, 2, 3, 4, 5, whatever, per issuer entity as applicable for all issuer entities, right? So we're essentially going to focus on this column here. So it says notes, coins, any balance or deposit on an account held in South Africa, money market instrument, whatever, any positive balance in a margin account with an exchange, and then any positive net balance settlement accordance with whatever, buying and selling of assets, right? So it says the limit is 25%. That's the maximum that a fund must sit in cash. So your fund cannot take money. So your pension today, as we speak, you now know, let me write with a red pen. You now know that when it comes to cash, at most, it's sitting on 25%. So when we look at that 4.2 billion, or at least 25 million, or is it 2,500? I'm just gonna redo the calculation. 2,500 times 1,000 of you guys per month, multiplied by 0.25. So 625,000 rand of that goes into cash, and then the remainder minus 625,000, 187 every month gets invested somewhere, and I will tell you where that somewhere is. So 1,875 per month gets invested, and then only 625,000 may be in cash. So you know that your pension fund is definitely investing your money. There's no way that you think whatever, Momentum, as I use the brochure, Sanlam, Ellen Gray, they're just sitting on your money. It's not possible. They're not, right? And then it says 5% in a foreign bank. So you know that this 25% is sitting in South Africa. It's essentially losing money, right? Based on the currency fluctuations, what have you. Maximum of 25% in a South African bank. And so you even know that if this is losing money, you would encourage them to invest. So they're probably even sitting on less than 25%. And we're going to go through some of those items so that we can see um, what your actual pensions are sitting on. So it says any balance in a foreign bank. We spoke about that. We touched on it. This is going to go much faster later on. This is just important right now so that you know the regulation that governs your pensions. I don't want someone to come and say, hey, no, I lied to them. And then says money instrument issued by a foreign bank, including an Islamic management financial instrument. Okay. So it just says cash or cash instruments. Then we go into debt instruments, including Islamic debt instruments, right? In this instance, they're then talking about bonds. And here we're talking government bonds, or it will define actually. I don't have to guess, right? 100% for debt instruments issued by or guaranteed by the Republic, otherwise 75%. So again, it says that you may include the whole amount where it's the thing where it's a debt in South Africa, and then if it's outside of South Africa, you limit it to 75% issued or guaranteed. And they're saying that the limit where it says a debt instrument by and loans to the government of the Republic and any debt or loan guaranteed by the Republic, right? So that's government. And then says debt instrument issued or guaranteed by the government of a foreign country. So we can only invest 10% in the debt of a foreign currency, foreign country. So this is foreign country. So if you want to invest in America, because they've got tons of debt, limited to 10%. And then says debt instruments issued or guaranteed by a South African bank against its balance sheet, 75%. So this is SA Bank. And then this is government, right? Listed on the exchange with an issue market cap of 20 billion or more, or an amount or conditions as prescribed, 25%. Right? So this is now where we're talking about what's this? Investing in banks in South Africa or guaranteed by a South African bank, or debt where South African bank says will cover you if there's a loss. It's 25% as well. Right? Listed or in an exchange with an issuer market cap of 2 billion and 20 billion. So a smaller item, it goes down to 15%. And then it then says with an amount less than 2 billion. So basically, if a company that has got a market cap of more than 20 billion, we can borrow them 25% of our pensions. If it's got a market cap of 2 billion to 2.5 billion, then we can issue them 15% of our pension. And if it's 2 billion itself, 10%, i.e., the bigger the company and a bank is willing to take the losses for them. So, for example, Steinhoff pensions could put up to 25% of their pensions in Steinhoff. That's in essence what it's saying, because Steinhoff was worth more than 20 billion. And then it goes down, goes down, goes down. For example, Louis, I think Louis, I will even check actually. because as I said, I don't want to deprive you of the correct information. So I'm just going to look at Louis. What's its market cap? Louis's market cap is 2.2 billion, 2.3 billion, right? So Regulation 28 says a pension fund can put 15% in the debt of Louis, right? So it's 25% all the way down to 10%, depending on the size of the company. And if the company is not listed on the exchange, this is very important. A pension can invest 5%. I'm going to put this in green. Why that's important? Sometimes we think this is not possible. So you will see there are situations where, or I will discuss, where you would like to start a business and you would like to have debt taken out in that business. And the Regulation 28 says that, listen, to the extent that a South African bank is willing to guarantee that debt in the event of failure, a pension fund may borrow you 5% of its assets, right? So I can go to my pension fund and I say, borrow me 5%, up to 5% of your assets, considering that if I fail, the bank says they will cover me. So I don't have to borrow money from the bank. I can borrow money from my pension fund, right? Then from there, it talks about debt instruments guaranteed by an entity that has equity listed on the exchange. Essentially, right, or debt instruments issued or guaranteed by a public entity under the public PFMA. So this is basically to say now if the debt is not guaranteed by a bank, but guaranteed by another company that is listed on the exchange, the limit is 10%. So company to company debt says 10%. And then if you're not listed again, it's 5%. And then it speaks about other debt instruments. I wanted to get to this part. Then it speaks about equities, right? When we get to equities, it says if you are inside the Republic, preference and ordinary shares in companies, excluding shares in property, companies listed on the JSE, on an exchange. Yeah, the 75% will make sense of it now. It says issue a market of 20 billion or more, 15% that you may invest. Issue a market cap of 10%, it's limited to 10%. The whole categories again, Louis, whatever you name it, and then 5%, right? So let's say equities, and then it says 15%, 10%, and 5%. And it continues to go down. You can see essentially where I'm getting my information, right? Immovable property, again, limited to 25% of the portfolio, structured in the following ways. So, yeah, issue a market cap of 10 billion or more, limited to 15%, and then issue a market cap of between 3 billion and 10 billion, 10%, and then issue a market cap of more than 3 billion, 5%. And then it speaks about immovable property in property linked to units of shared debentures, whatnot, not listed on the exchange. So it's limited to 15% if it's not listed on the exchange, and 5% of the assets, right? Then Kruger Rands, gold, and any other commodities, it's 10%, and that sort of thing. So I'm gonna write the immovable, limited to 25%, and then depending on the market cap, you may put up to 15%, 10%, and 5%. The unlisted. Let me see if there's equities in unlisted companies, and I'm sure there is. Preference and ordinary shares in companies, excluding shares in property companies, not listed on an exchange. Yes, that one, it's 2.5%. So your pension fund can invest 2.5% in the equities, or 2.5% of their assets in the equities of our business. So equities, let's say 2.5%, and that's for the not listed part. This is just to show you that your pension funds can invest in your companies. Sometimes we hear calls for, we need to start a black bank, we need to whatever. And this is now where I'm saying to you, Regulation 28 says, listen, if you have a pension fund with Sanlam is allowed to invest a maximum of 10% of the pension fund in unlisted companies. Of that 10% in unlisted companies, 2.5% must go into the pref shares of the following size. Or in other words, limited to per company, 2.5% per company, 10% in total of all the unlisted holdings, right? And then it speaks about the immovable property, the commodities, not listed property. So those of you guys that want to go into property stock files, ask your pension fund to fund it for you. Investment in the business of a participant employer inside the Republic. This is, for example, to say Sanlam can invest. So let's say you work for my company, Finance Hut, right? Finance Hut takes out a pension fund with Sanlam. Sanlam may invest 5% if 5% into my company because I'm the employer company, participating employer company, and then allowed to an exemption. To the extent it has been allowed an exemption, it can go up to 10%. And then housing loans granted to members in accordance with the provision of the section, 95%. So Sanlam can give you guys home loans. Then it speaks about hedge funds, private equity funds, and any other asset not to referred to in the schedule. 15%, limited to 10% of hedge funds, which can go up to 5% per hedge fund, 2.5% per hedge fund, funds of funds, and hedge fund. I'm just mentioning these for those people that know what these are, but it gets it's not getting complicated, to be honest. It's getting very specific. And if you take the time to read this, you will understand it, right? Then private equity funds, essentially, for example, as we had with thousands, pension funds could have invested up to 10% in private equity funds, of which 5% could have been a fund of private equity funds, or 2.5% per fund. So your Sanlam could have invested up to 2.5% in thousands. For those of you that could not become members of thousands, now you're starting to see where this comes in. And then other assets not to refer to in the schedule, 2.5%. We're going to summarize it now. I just wanted to go through Regulation 28 because this is going to form the basis of the conversation that we're about to have. I don't want us to have a situation where we keep making references, but you don't know what we're referencing to. Just to highlight again, right, what this is saying, essentially. This says a pension fund, oh, now I'm getting corrected. Ooh, sorry about that. A pension fund may hold 100% cash, but that cash must not be more than 25% in a single bank. So 25% in Absa, 25% in Standard Bank, 25% in the others, and then 5% abroad, sharp. Then debt, i.e. government debt, they may hold 100% of government debt, but limited to 10% if it is a foreign issue. They may hold 75% of debt issued that is guaranteed by a South African bank, but limited to 25% per company with a market cap of more than 25 billion, 20 billion, and that sort of thing. Not listed 25%, not listed debt instruments 50%. I'm not going to reread this, but essentially what I want you to see is that pension funds can invest up to 75% in equities, which is the highest returning asset class, only up to 25% in property. So your pension fund is unlikely to sit in property, then commodities, and then investments in businesses, and then housing loans granted to members in accordance with that, and then hedge funds as discussed below. And now we can go to the momentum article and see what it then says about Reg 28. So I'm just gonna re-Google it so that it pops up again as the limits. In essence, in summary, broadly speaking, it means you can invest a maximum of 75% of your retirement savings in shares, a maximum of 25% in property. So now you know that your pension fund cannot invest more than 25% in property, more than 75% in shares. But it then starts to show you that effectively, this is what the legislation believes in. And then 45% in international assets. And this is just to block too much money going outside the country. So in an ideal situation, you would have some sort of balance across those asset classes as Momentum has summarized it, but you would have seen what I did there with reading the regulation. And so if we look at this 4.2 billion, there's a possibility, not even there's a possibility, the maximum of it that may sit in property is 1 billion. And I will tell you why that is important, right? Then a maximum of that multiplied by 75 divided by 25, 3.1 billion may sit in equities. And then 1.89 billion may sit abroad. And you find this a balance of sorts in that regard, right? That was just to guide us as to what the pension funds regulations essentially, or the regulation of pension funds says about where your money can go, you know? Now what I'm going to do is I'm going to open some of your pension fund providers just so that we can see where the money sits. Some of you will say I'm choosing violence. I'm saying, not really. It's only violent if your pension fund provider wants this to be a secret, but I mean, this information that's available, right? This public information. So I'm gonna start with Old Mutual, everybody's favorite. And I'm gonna have a look at what are the demographics, what are the assets under management, that sort of thing. It's a nice PE ratio. Market cap is 58 billion. So we know that we're dealing with an issuer more than 20 billion. So essentially, Government says go to town with it. And they've got 29,000 employees. Number of units issued, those are the number of issued. First of all, I want you to see who's the majority shareholder in Old Mutual, right? The majority shareholder in Old Mutual, I think actually I'm gonna put this on a separate piece of paper. I'm taking notes. And you know what? Actually, on this segment, let me actually record another video so that we don't have videos that are too long. Okay? So I'm gonna stop the recording. And in the second part, we're going to look at each individual pension provider and how much money they sit on and who's the shareholders, so that we can start having these sort of conversations in public. So I'm just going to pause the recording or stop the recording. See you in video 2.